I'm surprised, really, that we haven't seen more weakness in the dollar because we've seen strength, and we haven't seen any strength in gold. Gold's been flat. In fact, we had a lot of volatility on Thursday. We did get about a $30 rise in the price of gold. And then on Friday, we got almost a $40 drop in the price of gold. And the catalyst there was we got one data point, the PMI for June, that was stronger than expected. We got that one number, and the dollar, jumped big. Gold got clobbered immediately because we got one, strong economic number. Well, I mean, it's lost in the sauce of weak economic numbers. I mean, talk about an exception to the rule. Most of the economic data we get is weak.
On Monday, spot gold traded softly, with gold dollar hovering around $2,330. A sense of caution prevailed across financial markets as investors awaited fresh news on macroeconomic and political fronts. Despite expectations for a weaker dollar, American stockbroker Peter Schiff expressed surprise that the dollar has yet to weaken more significantly. Consequently, gold has yet to show substantial gains either. The gold market remains in a holding pattern, awaiting the latest inflation data with Friday's Personal Consumption Expenditures Index. Last week, commodity analysts at TD Securities indicated that the gold market is vulnerable to the timing of the Federal Reserve's interest rate cuts. They foresee near-term risks to the downside if inflation exceeds expectations. However, they also anticipate that any weakness in the gold market will be short-lived, predicting higher gold prices by year-end. Peter Schiff, often dubbed Dr. Doom, noted that while some people now believe economic indicators are irrelevant, having predicted a recession for so long without one materializing, it's possible that the recession is already here but not accurately reflected in other statistics. Schiff suggests that the quality of jobs is deteriorating, with significant layoffs in tech companies being offset by the creation of multiple lower-paying jobs, thereby distorting overall employment figures. According to a recent report from the Bureau of Labor Statistics, the unemployment rate stands at 4%, with a slight increase in the number of unemployed people, now totaling 6.6 million. This figure remains below the Federal Reserve's target rate of 5%. Schiff argues that these numbers hide a deeper problem, warning, "We'll be lucky to get off with just a recession. It's looking more like a depression." Join us as we delve into Peter Schiff's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
If you're looking at retail sales as some kind of driver of the economy or barometer of the economy, this was a horrible number. I'm surprised, really, that we haven't seen more weakness in the dollar because we've seen strength, and we haven't seen any strength in gold. Gold's been flat. In fact, we had a lot of volatility on Thursday. We did get about a $30 rise in the price of gold, and then on Friday, we got almost a $40 drop in the price of gold. And the catalyst there was we got one data point, the PMI for June, that was stronger than expected. Instead of coming in at 54.5, it came in at 54.6. And the manufacturing index came in at 51.7 versus 51. And the services index, which was supposed to be 53.7, that one was a bigger beat at 55.1. We got that one number, and the dollar, jumped big. Gold got clobbered immediately because we got one, strong economic number. Well, I mean, it's lost in the sauce of weak economic numbers. I mean, talk about an exception to the rule. Most of the economic data we get is weak, yet the market seizes on this one. In fact, we got the leading economic indicators that came out also on Friday that were much worse than expected. I mean, they've been down every month for, I forget how many. It's been so many. There's been 1 month that we had the data up. And it's been like 2 years or something like that, I forget, of negative LEI. In fact, we had broke the record set during the 2008 financial crisis, or during the Great Recession, rather, of negative leading economic indicators. And the numbers we got today, I'm looking for them. I got them somewhere on my computer. Oh, that's the Empire State Manufacturing. That was down. That was a weak number. Yeah, the LEI was down 0.5. It was supposed to be down 0.3 and down 0.5. And the prior month was down 0.6. I mean, 2 lousy months. These are forward-looking, they're leading indicators. Remember, now people think that they don't even matter, right? Oh, these indicators must not work because they've been predicting recession for so long, and we haven't had a recession, so I guess they don't work. Well, maybe they do work. We do have a recession. It's just our other statistics are wrong, and they're not properly labeling the recession that the leading economic indicators have been forecasting for a long time.
Consumer sentiment regarding the state of the economy could be pivotal in shaping the 2024 presidential election. President Biden is grappling with one of his biggest challenges: inflation. Although inflation has recently cooled, it soared during his early years in office. Meanwhile, former President Donald Trump frequently boasts about his economic record, though these claims are tempered by the mass job losses and supply chain disruptions caused by the pandemic. The Consumer Price Index, the most widely used measure of overall inflation, has increased by about 20% since January 2021, significantly lower than Trump's estimates. Year-over-year inflation peaked at 9.1% in June 2022. Peter Schiff points out that during Trump's presidency, inflation averaged around 1.9%, whereas under Biden, it's closer to 5.5% or 6%. This allows Trump to claim that inflation was low during his tenure and spiked under Biden, potentially making it a central issue for the election. Let's get back to the interview.
Trump never made the mistake of doing the PPP programs and the stimulus in the first place. Biden wouldn't have been able to get away with what he did. So I think there's a lot more responsibility that belongs with Donald Trump for this inflation that, of course, Trump is going to own up to. But from a political perspective, he's doing the right thing. Inflation is horrible. And you might as well blame it on Biden because the media doesn't understand it. Nobody understands where inflation comes from. During the 4 years he was president, inflation averaged maybe 1.9, right? Below 2%. With Biden, it's maybe 5.5, 6, something like that, the official rates. So he owns that issue. He can certainly say Biden caused all this inflation. And when I was president, we didn't have inflation. When Biden is president, we have huge inflation. So reelect me. We'll have no inflation. You want inflation? Vote Biden. You don't want inflation? Vote Trump. Because I think that is what a lot of voters are going to do. They are going to blame Biden and not Trump. And Trump could win on that. And that alone, because inflation is going to be the number one issue in this election by far. And again, inflation is really taxation. That's what it's all about. You know, people want to know. I'm reading all these articles about how people are struggling to pay the bills, and they're taking second jobs and third jobs, and they're borrowing all this money, and now they're going to take out a second mortgage on their home. They're struggling to pay their taxes is what they're struggling to do. They're struggling to support government, the size of government. Remember, the government is much bigger now than it was before COVID by a massive percentage. So how are we paying for all this government? I mean, if we're having a much bigger government, where is the bill, right? We don't get it for free. Nothing's free. There's no free lunch. So if Americans are buying a lot more government, well, how are they paying for it? Inflation. That's how we're paying for it. They didn't raise our taxes. They raised our prices because instead of taking our money to pay for all these extra government programs, they took our purchasing power. They didn't tax us, right? They didn't take our money out of our paychecks. They took the purchasing power out of our paychecks. They printed money. We're running bigger deficits. The deficits are over $2 trillion a year. They were a fraction of that prior to COVID. So the government is spending all this money, and as a result of all the money they're spending into circulation, prices are going up, and now everybody has to pay higher prices. And now everybody is struggling. But what they're struggling to do is to support the government. All of the people that Biden said weren't going to pay any new taxes if he was president, they're all paying new taxes. We just call it inflation. And so when they're pissed off about high inflation, they're pissed off about high taxes, which means they're pissed off about big government because that's what you get when you have big government. You have big taxes to pay for big government. You don't want big taxes? Then have small government. Right? That's why people want small government, because they don't want high taxes. They want low taxes. But the public has been fooled into thinking they can have their cake and eat it too. They can have big government and low taxes. You can't. So what you have is big government and high inflation. That's what we've got. So it's an inflation tax instead of a payroll tax or an income tax, but it hits the middle class and the poor the hardest. And that's why Biden is struggling with those voters.
President Biden is grappling with the challenge of addressing inflation, which, despite recent cooling, soared during his early years in office. Can his administration's economic policies and potential recovery efforts win over skeptical voters? Or will the financial hardships experienced during his term overshadow these efforts? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.